By the way, you know that Thursday, Sarat, marks the alleged bottom, a year from October of 22. Paul Tudor Jones on Squawk. Recession likely. Stock market will decline about 12%. That's what he offered up today. I mean, I listen to him when he's on because he makes some really great points every time he's on. What about this idea, though? I mean, recession likely. Stocks may decline about 12%.
Yeah, if you look at the market weighted, maybe that happens. But if you look equal weighted, there's a lot of opportunity. We were just talking about the small caps and the mid caps. So there's plenty of opportunity at 490 other three stocks. And if you get multiple compression, and we're right that advertising slows down, and you get some multiple compression on the big stocks, you still have other places to play, and that's why being in the index is going to be tough. But you can play around the edges, and I think you can do well.
But he's been negative this year, hasn't he? I think that for most of this year, he's been negative.
That doesn't mean he's obviously an astute enough investor that. Correct. If he sees something different, he'll call it differently.
Yeah, but the recession.
What he's been. A lot of people were.
I understand, but the recession call is one that many people have made from the beginning of the year, the end of last year, and it hasn't happened. And the likelihood seemed higher over the past couple of months, and now it's coming back down, perhaps again if we don't get another rate hike. So, it's
why do we get the recession, right? Are we getting the recession because the Fed went too strong, or are we getting it because we have a demand issue, right? So I think that's where we have to kind of say, if it's the first, then you could be down 12%, and the other side.
I don't think it is.
I'll only bring it up because again, you're 2 days away from the 1-year anniversary, Jim, of the October bottom, in an environment where not everybody is on the same page suggesting, well, we're good and we're going to have a soft landing. There are a number of people who still think, well, that was a bottom. Probably wasn't the bottom, because this whole thing has not been a new bull market. It's been a bear market bounce.
So
there's a lot of voices on that.
Yeah, so let's start with this. I'm glad there is a wide array of thoughts. I worry when everybody's on the same page, which, by the way, at the beginning of this year, everybody, I mean, remember how many people had their models saying 100% chance of recession? That's ridiculous. Anybody who walks into your office and says they're 100% certain of anything in the future, just throw them out of your office. But back to the bigger point, go back a year ago, right? If a year ago, any of us said that we're not going to be in a recession, any of us besides me, sorry, I am going to pat myself on the back on this. Any of us said we're not going to be in a recession a year from now.
I'm going to pat you too.
Don't hurt yourself.
But no, people were punching me in the face on this, right? I mean, here's the thing. That decline last year was predicated on a recession this year that simply didn't happen. So the market should be up. And as we look at the economy right now, I'll pick a statistic that matters to me. 200,000 for weekly jobless claims. This economy is not close to recession. As for the risks, and of course I respect Mr. Tudor Jones, but we could take a look at, resumption of student loan payments or inflation or whatever. There are always risks, folks. You've got to ask what's priced in the market. The market's a lot cheaper than it was 2 months ago. And it's not priced into this market still is the possibility that we have a nice soft landing and just keep growing our economy.
All right. So